Folks, as we get into 2021, really get into 2021, electric vehicles are now becoming mainstream. By that, I mean electric vehicle sales are now at the disruptive stage where they're soon to grow exponentially. Yes, exponentially. I mean massive growth. Global electric car sales finished December 2020 with over 500,000 sales for the month, up 105% from December of 2019. To put that above sales into perspective, 2019 global electric car sales reached about 2.5% market share. 2020 global electric car sales hit about 4.2, depending on data sources. Based on this, it looks like 2021 we're going to reach about 6 to 7%, and 2022, 10%. Now imagine, 1 out of every 10 cars on the road being an electric vehicle car. New cars, obviously. That's amazing. That's the future, but it is here today. And that's why I'm spending so much time talking about these darn electric vehicle stocks and ETF. Now, ARK Invest forecasts global EV sales are expected to hit 37 million by 2024, or about 40% by 2025. And Tesla CEO Elon Musk, he's guidance for global electric vehicle sales to reach 100% market share by 2030. That's a lot. He's also announced a $25,000 Tesla electric car to be ready by 3 years, less than 3 years, 2023. That's huge. So today I want to give you or bring to your attention 6 EV ETFs that I am completely in love with, and they're all doing really well. So the first one is ticker symbol DRIVE, Global X Autonomous and Electric Vehicle ETF, ticker symbol DRIVE. And here's the constituents, and you can see here it's not some small companies. Google's getting into autonomous vehicles, Microsoft, Intel, Apple, NVIDIA. And then you have smaller and smaller companies. And what I like about this gives you a chance to get into this segment of the market without putting all your eggs in one basket, because here you're actually buying 77 assets. And this is one of the big ones, percent top in the 10%, 28%. So it's got good exposure. And again, it's not just smaller companies. And if you look at the chart of this stock, this Global X Autonomous Electric Vehicle ETF, it is smoking hot. The stock is making, the ETF, I shall say, is making all-time highs or near all-time highs, just had a pullback and is reaching for higher prices again. This is one of the top electric vehicle ETFs. And again, it's not just about the batteries. It's not just about the car. It's about the whole technology and the whole industry. So if you want to get on the whole industry, this one ticker symbol can get you there. Ticker symbol DRIV. Next one is the CARS Electric Vehicle ETF. Ticker symbol KARS. It's got 65 holdings and the top 10% make 33%. Usually, typically, most often than not, you will find that the top 10% hold between 25 and 35%. So 33% is not too much. And again, look at the assets. Texas Instruments, Analog Devices, NVIDIA, Advanced Micro, Mercedes, Dalmir. And again, if you go further, you'll have semiconductors. So this is a way for you to take advantage of the entire industry of the electric vehicle and future mobility. And again, folks, this is the future and there's no running away from it. Ticker symbol KARS. And if you look at the chart, you will see one thing you will notice. Each of these 6 ETFs is following a very specific trend. They're all either at 52-week highs or within a percentage point of all-time highs. This one's actually doing better in terms of relative strength than DRIVE. DRIVE hasn't taken out the high, while CARS already has. Next one is the HAIL, ticker symbol HAIL, HAIL, and that's the Kenzo Smart Mobility ETF. And this one has smaller stocks. It's got 60, top 10%, right under 30%, but it doesn't have the Googles, it doesn't have the Microsofts. You've got the Plug, you've got the Blink. Now, this ETF, simply by the fact that it has smaller stocks making larger percentage of its portfolio, will give you more volatility, but it'll also give you more upside. So it's a trade between risk, the volatility and upside. And again, notice it's making all-time highs. Ticker symbol HALE. So HALE and cars are outperforming Drive, but that's simply because Drive has the largest market capitalization in terms of the stocks in its cap. Next one is iDrive. I like this one a lot. This is a fun one. Self-driving EV and tech ETF. So again, it's the whole segment, but this one's not focused as much on electric vehicles. It's focused more on autonomous vehicles. Now, you may ask, what's the difference between autonomous vehicles and electric vehicles? There's not really that much. But here's what's cool about this. It's got 115, so it's more bloated. This one will tend to follow the market more so than the 3 previous ETFs because it has 115 holdings. It's more bloated, and it's got 39% of its exposure in the top 10. I'm not a huge favorite of it because I think once you get beyond a certain percentage of ETFs or stocks within the ETF, the percentages, the movement of the ETF becomes a lot more like the market. Now, there's nothing wrong with that, but again, it tends to lag behind. So I'm currently liking the cars and HALE, and I would say the iDrive and Drive are more behind. Next one, this is more focused towards lithium batteries. Now, we've had our fun with self-driving cars, with autonomous cars, and with electric cars. But now let's more focus on the batteries. So if you're more of the lithium guy than the actual self-driving cars, then this is for you. And again, these sectors, these industries are all going to move together. Just keep in mind. But this one has less stocks. It only has 42 stocks. So you're going to have more volatilities. But the top 10 make up 61%. And if we look at the chart, notice Albemarle is the first one. That's the biggest lithium manufacturer and producer in the world. Notice this one's lagging a little bit behind. It's not pulling back, but I think it's going to go up again. And again, GX Lithium. If lithium is your thing, if you're less bullish on the car and more bullish on the actual battery, which is fine, go with a lithium. Or how about getting a lithium ETF and combining it with another? Get 2 ETFs. And then you've got the entire industry. You've got the battery and you've got the self-driving cars, all with 2 purchases. Nice, right? So I like this lithium. I like where it's going. Now let's look at our last one, and this is battery. Now remember, we started off with Drive. This is just the global, the big, self-driving cars, electric vehicles, the batteries, everything. Then we get narrower. Then we get a little narrower. Then we get into the self-driving cars, and this one is bloated again. Then we get into the batteries, and this is the last battery ETF. But again, this one has more exposure. And remember, Tesla is really an electric vehicle battery. It's a power company, if you will. And this one has less exposure, 75 stocks, not as many. Has less stocks, or excuse me, it has more stocks than lithium. This one had, I believe, 60 stocks or 40 stocks. Battery has 75 stocks. Top 10 makes 45, so it's a little top heavy. And as you can see here, it's got NIO, it's got Blink, it's got XPV. It's got all the suspects, all the usual suspects, I like to call them. And this is the advanced battery metals and materials. And I think if you're into the basic materials, I'm very bullish on basic materials. This may be a good one to buy. Now, here's a thought for you. Buy 3 of these. Get 1 battery, get the self-driving car, and then get the electric vehicle car. And then you'll have all 3. But what I like about them, some focus on large cap stocks, some focus on smaller, bigger stocks. What you want to do is you want to look at the constituents. If you look at the constituents, you will find 3 that have less combinations. So for example, this one has 7% of Tesla. So this one, for example, let me show you this one here. Let's look at how much Tesla it has. The cars. See, Tesla's not here. Tesla is 3%. There you have it. So you wouldn't want to buy 2 ETFs that have 6% of Tesla, because then you're ultimately buying 18% of Tesla. So what you want to do is you want to look at the constituents. Just go to bar charts, type in the ticker symbol, go to constituents right down here, and look at the percentage of each stock and just compare them. And then you can look at for example, here, let me give you a comparison. Here's the Global X. Let's look at the constituents on this one. This one, you can pick all the ones that have all the various stocks. So let's look at this one, Tesla. 2.9%. Texas Instrument, 3.62%. Does this one have Texas Instrument? Nowhere near here. So again, you can go through them, go through the constituents, figure out what percentage of each stock. You don't have to figure it out, it'll tell you. And then you just look at them together and make sure you don't bundle them together, or just pick one. Pick the iDrive or the Hale or the cars or the lid if you're more into the batteries. But again, my focus here is this industry, this sector is red hot. And it's imagine semiconductors in 1980 to 1990, okay? That's where the electric vehicle industry and the sector is right now. It's red hot, and it hasn't even become hot yet. It's only going to go on most people's radars by the end of next year. So it's a promising sector, it's a low-hanging fruit, and it's a sector that you really need to be involved in. And I hope that helps.